welcome to another Major Market Movements End of the Week Market Review for August 28th, 2015. I'm Quad G, and in this video we're covering the PM complex, starting out with gold, and I've got this on the 2-hour scale. I wanted to point out a few things on this up move. From the low back here, July 23rd, 24th, everything from this point forward has been either back tested, filled, any kind of manic move, any kind of breakout has basically been filled right up to this point right about here. So if we zoom in this a little bit further, you see, like, for example, we had this manic shot to the upside, but then we had a retrace that filled up that manic move. We had another shot up that got filled in later on, as you can see. This was obviously a very manic move to the upside, completely filled, and then it moves on to the upside. So this price territory from about 1076 to about 1126 is completely solid. There's really nothing, there's no need that I can see for the market to need to come back here to fill up any gaps, to take care of any garbage. So one reason I was interested in this price action and finding a bottom here is because there was a breakout right here that didn't get a very solid or very complete back test. There was a very minor one before it went sailing off to the upside. So this corrective move to the downside has given this breakout plenty of time to be filled up, completed, if you will. And now we've basically taken care of all the mess, and the trend could keep on rocking to the upside, I think, while we're above this key level right here, this low at about 1117.63. Now, could this just be some kind of B wave up and another impulse to the downside? Certainly can. There's no guarantee that the trend won't reverse, but one of the things that heightens the probability of a continued move to the upside is the fact that there's no lingering gaps or manic moves to the upside that need to be taken care of down here. Okay, so I want to look at the daily and point out that yesterday we had this hammer candle. You could also consider it a harami candle. And then today we're seeing some fall through to the upside. So this 2-candle combination is looking pretty bullish so far. The QG3 is in a neutral alignment. The 3 EMA is down here and closing right at the 10 EMA. But you can also see that the 20 DMA is doing a really nice job of holding up this down move, creating some support here for a possible turnaround. The weekly candle is negative, meaning a negative close, but it closes inside the previous positive candle. So we don't have an outside key reversal here. This is more or less just an outside negative week, which is neutral. EWO, we clearly have the new higher high in the oscillator compared to the last higher high back here when prices were at 1230. So we have a positive divergence on the top side of that oscillator. That lends to the bullishness of all the technical patterns. And the RSI came up and we touched the 70 level. That's really good for a midterm turnaround. Now all we need is for any corrective action to preferably keep the RSI above the 40 level. Similar to what we saw back here. You see that the trend came up. It came up and hit the 60, didn't quite hit the 70 yet, but the pullback from that level found support right there at 40. You can see it did it a couple times before sailing higher. So that's what I'm going to be wanting to see here is for that 40 level to hold as support. If we even get there, we may not even hit that point before sailing higher again. The MACD is open to the upside on the daily, and on the weekly, we're still in negative alignment. Histogram bars have shrunk, however, so it's not quite. It may be looking to turn around here, but it's not quite there. So overall for gold, I do think there's some good indications of a possible turnaround here, and there's plenty of room for some more upside action. Of course, I'm going to want to see the price action keep above, especially on a daily closing basis, above that 20 DMA. That's a crucial support. Let's move on to silver. Silver on the 1 hour, we do have a very sloppy, somewhat ugly 5-wave move to the upside with a wave 1, wave 2, 3, 4, and 5. That's complete. So even if we did pull back, which we still could, there is this manic drive to the upside that didn't get filled. So another corrective move down to say about 1420-ish or so could fill in that manic move. Clean that up, and then it might be ready for another surge to the upside. Daily candlestick patterns, not particularly bullish or bearish, just very neutral there. The QG3 has a open alignment to the downside, a bearish alignment to the downside, and so we did close, however, above the 3 EMA. So that means that this previous impulsive run to the upside or downside could be converting here to at least a corrective move to the upside with this close above the 3 EMA. I think it's possible to come back up here and at least give a test of the 20 DMA, possibly much more, but we'll have to wait and see. Silver spot on the weekly. We do have an inside 1, 2, 3, 4 inside quadruple key reversal on the weekly, so that's bearish. That does set a key top there. That high is at 1566. So technically the trend is still very bearish below that level, potentially very bullish above that level. We're still got plenty of room here for a positive divergence in this oscillator. We've already hit it. We've already developed it once. We could hit it twice for a double positive divergence in the EWO. And same thing with the RSI. We got the lower low in price, but we got a higher low in the oscillator compared to the last swing low. So that's we still got still well into positive divergence territory for this current price action to the downside. The MACD is open to the downside on the daily, and on the weekly we're also remained open to the downside as well. So silver is still looking somewhat bearish here. I do think there's a chance that we could get a bounce up to, at a minimum, the 20 DMA, right up there at about 15 or just under 15. I also see, however, that the last couple times, well, this time we did see some support at the 20, but we did see a very quick move through the 20 DMA right here and a quick downward move here. So there is a chance that we could get yet another a slice right through the 20 DMA to come all the way up here to the upper Bollinger Band. It looks like silver is maybe in a very choppy, sideways, kind of an angry mode or mood right now that could allow for quite a bit of shaking in this market. And like I said, has the potential of maybe swinging all the way up here to a new high or a fresh high, maybe up to 1570s or so. Let's move on to platinum. Okay, platinum on the daily. We had almost the full reversal of the previous shot to the downside. The 20 DMA did not hold as support, but we did finally see some recovery here, and the QG3 is moved back into a bullish alignment to the upside. Platinum on the weekly, we do close as a bullish hammer candle, not in the best of placement, since this isn't occurring at the bottom of a trend. This was a better hammer candle, even though it was taken out just slightly. However, even though it's not in the best of placement in the trend, it does set a key low as well at 967. So as long as we stay above that in some kind of choppy three-wave behavior, that's going to be bullish. If we shoot down, say next week, and we close the week below this week's intra-week low at 967, if we close next week below that level, then this could be a potential hangman candle being confirmed, and that could allow for some fall through to the downside, more than likely down into a fresh lower low. Platinum on the EWO, we do have a slight positive divergence there on the top side, as we have a higher high in the oscillator compared to the last swing high right here, even though the price action is at a lower high compared to the last swing. Platinum on the RSI, we did come up and poke above the 60 level, though we've fallen back in. We did find some support at the 40, and that's good potentially for the midterm, but we're going to need to continue to see the 40 level hold, and if it does, a breakup and touch of 70 plus in the near term could allow for be a good strong signal that things are turning around here for the midterm, and we could see some follow through over the next several weeks to the upside. The MACD on the weekly is closed out. It's neutral for the week, and daily we're open to the upside. That's bullish. So platinum, I think it's got some bullish potential here, especially hanging out above the 20 DMA, and obviously crucial support is going to be at the end of this hammer candle with that low at 967. All right, let's take a look at the Elliott wave charts and other technical charts. All right, so here's gold, and here's one potential that I see. I see lots of potentials here, and I've gone over them before in other videos. I'm not going to rehash all of that. You can certainly go back. I got them all cataloged there on the website, on the forum. But here's one count that I'm considering. There are certainly some bullish counts here that could allow for a major run to the upside as well, but I prefer to just take it one step at a time and consider all angles. And so this particular angle suggests that we've got a wave 1 complete, wave 2 complete, a wave 3 complete, and now we're working on a sloppy, choppy sideways 4. And we could see this current move to the upside possibly find resistance somewhere between about 1180 to maybe 1200 before pulling back again. There is also, I don't have it set up here, but I'll take care of it real quick. This upper orange trend line that I've moved here is also a very key level of resistance. And if we do see the price push up above 1232 and test that trend line, it would be for a fourth time. So we'd have test number 1, test 2, test 3. This was almost a test, and this would be a fourth test. So that would up the probability of a rule of four, potential rule of four breakout to come after that. So 1232, very key level of resistance. We challenge, even just challenge it or exceed it. That's gonna suggest that this low is in fact in. Very unlikely that we're gonna move down any further, and we'll be set for a major run to the upside. And if that was to happen, if we were to come up here to 1230 or 1230 plus, we could get a pullback into a right shoulder of an inverted head and shoulders pattern. This being the left shoulder, left neckline, the head, right neckline, and then pull back into a right shoulder. And that would be, if that was to take place in the coming weeks, that would probably the next best setup for an entry that you'll see for the next run up, which would probably be a massive breakout to the upside, in my estimation. Okay, here's a closer count, micro count. Suggests that we got wave 1, wave 2 complete, sub 1, sub 2 finished, and then 3, 4, 5 for wave 3 black. We've pulled back into a wave with an A, B, C. Believe it or not, even though this is a very deep C, this is considered a flat correction because you have wave A, wave B extended a bit, and then you've got this semi-impulsive drive to the downside for wave C. So that alternates with the sharp wave 2 previously. So that's all good to go. And now I'm expecting a wave 5 to the upside that could come up here to test 1180. There certainly could be a double zigzag here too. This could be an A, B, C. This could be an X wave, and then we got another zigzag to the upside. That's another potential that I see that could come into that 1180 to maybe 1200 range. So the way this marches out, if it's a 5-wave move, that's going to be bullish for the midterm. If it's a 3-wave move up here and then a reversal, that's more of a corrective move, and we could get a larger drop from that point down. So, yeah, as I like to say, attitude is everything. So we got to pay very close attention to what kind of attitude the market's going to give us on this move to the upside. I just wanted to point out here the short-term, or actually midterm move. It's generated all the way back here in January. This purple trend line's also been tested once, twice, 3 times. We've got the pullback, so another move to the upside could create a rule of 4 breakout, maybe right there at about the 1157 level, 1160, something like that. Could spur our shot up to at least 1180, 1200, maybe even test that very important 1230 level. So we'll have to see. Okay, here is our COT update. Commitment of traders. Just wanted to point out that we still have plenty of room here for the shorts to get squeezed. As you can see, the previous tops here, I'm going to point to this one that took place back here in early 2015 at about the 1300 level. You see that the total amount of shorts by the time we got up there had been squeezed all the way out to about 62,000 contracts. And here we are sitting at about 140,000. So we've got at least half of those contracts are primed and ready to be squeezed out, causing the price to shoot up higher. Same thing back here with actually right about here. This top, as you can see, the total number of shorts at that time was about 75,000 at that top. This top here, right about here, at about 46,000. So yeah, we've got lots of space here. Lots of shorts that could potentially get squeezed down all the way to say somewhere between 40,000 and 70,000 contracts, more than half of where we are right now. So that would of course, produce a squeeze in price to the upside. That I think, based upon what I can see here, general measurement, I think there's enough there to get it up to about that 1230 level in one squeeze. Well, of course, nothing is certain, but I definitely see the potential there. All right, here's silver. Here's the silver count. Now, I realize that some may be suggesting that this wave 4 is in. We got wave 1, wave 2, wave 3, wave 4, and we could be looking at a wave 5 here. I don't prefer that count, but I can't rule it out either. The reason I don't prefer the count is because wave 4 is so much shorter in length and space, time distance here compared to wave 2. Wave 2 is sharp. This is certainly looking sharp, so we don't have any alternation. So I'm willing to give the benefit of the doubt to wave 4 not being completed yet, that we're still working on some kind of choppy, maybe expanded flat to sideways choppy action to fill it up. Maybe there might be enough for this leg to the upside to possibly hit the 1630 range, and then from there maybe one more shot to the downside, maybe down into October time frame for wave 5 of C of 2, our final low, potentially our final low, completing Eve, which mates with the atom and produces some offspring, some bullish offspring to the upside. This obviously this blue trend line I'm pointing out here has been tested once, twice, 3 times, 4 times back here, and now any challenge of that blue trend line is potential rule of 5 breakout. Rule of 5 just adds just that much more to the probability scale for a potential breakout, even more so than a rule of 4. So every time we knock on that trend line, you're just increasing your chance of a major push through and squeeze to the upside. All right, here's the shorter term count. Here's wave 3. If you go back to here, here's wave 3. Or, excuse me. Yeah, that's right. Wave 3 here. So we're just zooming in here. There's completion of wave 3. And I think what we got going on here so far, it's looking to me as though we have an A, B, C up for wave A. We've got an A, B, C down for wave B. And now we're working on what could be a 5-wave move to the upside for a wave C of 4 flat, and then another shot to the downside, potentially. Anyway, getting in long here, I think is a good idea. And just in case this is the completion of wave 5, certainly is possible. But, at this point, the $14.20 entry, you could potentially go up to $16.20. That's a $2 move. Shoot, I'd take a $2 move. I'd take a dollar move. So $2 move certainly is worth it to be looking to get in on the long side here, I think. All right, silver on the COT as well. Also wanted to point out that every one of these peaks in a run-up has seen the commitment of traders, see the total number of shorts come all the way back down to, that one was about 12,000. This one here is close to about 12. This peak here, about 13. This peak here, where was you? This peak here is about 13, 14, somewhere in there. And we're currently right up here at about 61. So, you're looking at about somewhere between, roughly about 45,000 contracts that are just sitting there waiting to be squeezed out of position. So allowing for a sizable move to the upside. All right, taking a look at GDX here. We didn't quite get it into a bearish alignment to the downside with GDX, just a neutral alignment, and so far we've come right back up and closed right at the 20 DMA. This is still somewhat neutral, but the fact that we're pressuring the 20 DMA is potentially bullish, and we are also closing above the 3 EMA after a previous strong move to the downside. So there's potential here of getting a close back above the 20 DMA and maybe seeing another surge higher. Here's GDXJ. Same thing, we got the shot to the downside. We did just briefly get into a bearish alignment to the downside, but the price came up and we're closing back above the 20 DMA, which I think is reminiscent of this move here, where we got a move to the upside and close above the 20 DMA, and that produced a spurt up, hitting well above the upper Bollinger Band again. So again, I think we could see another squirt to the upside and possibly challenge that upper Bollinger Band again, which is up here at about the mid $22 range. Here's the GDX count. One particular count that I'm entertaining. There is the potential of this also, much like silver. This could be a wave 1, a wave 2, 3, 4, 5. That's certainly a possibility. The alternate count there is with the colon. Anytime, just for you, those of you that may not know, anytime I put two counts on one chart, the alternate count always has colons next to it. So just to let you know, that's another way that I'm looking at it. So that's a possibility. The other potential that I see is just like the other silver count, is that this is just a since wave 2 was sharp, from wave 1 to wave 2 was certainly a sharp correction to the upside. This could be a choppy sideways move with an ABC, maybe come up here to test the 61.8% Fibo and the blue trend line way up here at about $18, and then possibly one more push down, maybe into October, for our final low for wave 5 of 2. So whatever the case, good idea to be long at this time to enjoy this push up into wave C of 4. This blue trend line also back out has been tested numerous times, once, twice, 3 times, 4 times, didn't get the breakthrough. So a 5th time is going to increase your probability of a breakout. And if we get a rejection a 5th time, shoot, I don't know that I've seen too many trend lines be able to hold back a price movement a 6th time. I think you're getting into the 90-95 percentile probability that you're going to see a breakout by the time you get into a 6th test. So we'll see what we get. This is exciting times, though, folks. If we do see a low in October, I think that's going to be just one of the best probabilities, chances of getting in on a major low of a market that you'll ever see in maybe the years to come. So I almost kind of wish that we do get one more shot down, because that's just going to make the probabilities go sky high, in my opinion, of finally completing a major low. Could we have the major low in right now? Absolutely. But we're going to need to see it proved to the upside first. Of course, proof sits up here at about $21. So we challenge or exceed $21. Yeah, that's going to prove that our final 5th to the downside was indeed complete, and we are rocking and rolling to the upside for most likely the long term, years to come. All right, let's take a look at GDXJ on the Elliott wave count. This is just the initial micro count to the upside. Very nice, clean move, impulsive move to the upside. 1, 2, 3, 4, 5. It's all there. It's complete. For wave 1, we got the shot down It's a very scary and deep retracement for wave 2, but it did its job. It chased out everybody. It filled in all the nooks and crannies of the crazy manic drives to the upside, cleaned up all the messes, and now it's ready, free and clear, to start another impulsive run. So I do think we are in the middle of another 5-wave impulse to the upside that could challenge or exceed 22, about mid 22. And then we might get a small pullback into a wave 2, and then it's gangbusters from there, potentially to the upside. Could this be in relation to the GDX count? This could certainly be an A, a B, and this could just be a C to the upside also, to marry with that other GDX count. There is that potential as well. But right now, I'm kind of favoring this count. We'll play it day by day, of course. This low down here at 1823 is obviously a very key support. We break that anytime soon, then it's best to be getting out, take your stops, get out, and we'll have to wait and see what the market's giving us. If it does break that, it could go significantly lower, so best to be out. Okay, I think that covers it for this week for the PM report. Okay, folks, that's it for now, and I hope you all have a great weekend. Let me talk to you later. Adios.